Alright, so welcome to Stonks 101. So I'm going to show you guys basically how to read or give you information that most people that trade in the stock market don't know. So let's start off by looking at some indicators that one can use to find really good entry and exit points within a stock. First of what is a stock? It's basically just a share of a company that has part of it. It's like if you buy a share of a company, you're basically an owner or part of an owner of that company. So let's start off with a basic indicator. Let's do a 1 month period of a gold stock I found. So one of the indicators you can use is and by the way, Yahoo Finance is the one I'm using right now currently. The first indicator I would use is what you call a exponential moving average. So we can have an exponential moving average and a period of 9 days. So we'll make a color. We'll throw in a few indicators. So 9 is one of them. We can add another indicator, and then 21 is another one. We'll make that purple. And then a 55 indicator. So you can have a smaller period, mid-range period, and a long-range period. We'll make it 55 and then an exponential, and then we'll make that pink. Okay. So, with these indicators, these moving indicators, basically there's just a way of telling which way the market is trending. So, depending on which way the market is going, that indicator will show it moving in a certain direction. So for example, right here we have the 50 period moving average, which is our 55 period moving average, which is lower than the 9 and the 21 moving average, and it's trending upwards. As you can see, this is starting to move upwards. So when the longer period moving average is below a shorter period moving average, and all the price lines, these candlesticks you see, are above this kind of line. This line is basically acting as a support line. And that support line is basically just like a line where a price bounces off. You can see it, the candlesticks come here, bounce off, come here, bounce off, come here, bounce off. This basically acts as support and resistance or support line, and it's trending upwards. So basically, with this stock for a period of 1 month, you can say that, generally speaking, you can say that this is going to be trending upwards. You might not know for sure, but that's just a basic guess of where this market is trending. And if you can go up like this and basically increase the time frame, let's say 1 year. Yep, it's all the same here. So this one you can generally say right now, as long as the 55 is underneath these two, the market is trending upwards. Now, however, this one seems to be crossing over, but this one is actually coming back over. So this trend would be continuing, or be considered continuing, assuming that market volatility isn't too high. Now, another one that you can have is what you call a moving average convergence divergence indicator. So let me describe what these are first of all. So we have a MACD indicator, and then we have a signal line. So basically what these two indicators are used for is that one line will cross over the other line at certain points, and then those points can be considered a buy signal or a sell signal. What you're looking for is basically the MACD to cross over the signal line at certain points. Let me show you as an example. So here, for instance, when this purple line, this is the MACD line, orange line is the signal line. When the MACD indicator crosses over, like upwards, through the signal line, this is right here is considered a buy signal. And as you can see, that makes sense. This is a low price, and then it continues upwards. So this is a buy signal. And then when you go closer, basically when you go further, this MACD line will come down and converge. That's why it's called convergent and divergence. They're converging here, then they're diverging, but then they're going to converge again. When the MACD line converges towards the signal line again, you consider that as a sell signal. And this is really important, or really handy if you're being a day trader, because if you go short periods right now, you can see that there's actually an incoming buy signal. And if you go one day, I don't think actually works at the moment because the market's not open, but the 5-day indicator suggests that there's a sell here at the high point, right about there, and then there's an incoming buy signal, which would be somewhere around 1.10-ish. And I bought this right here, like around down here in this dip area. Yeah, down there, which was a really good purchase signal, as you can see. When you look at this signal, you can't really tell whether, because these lines are kind of everywhere, but you can make a pretty good guess as to what happened in that day. This line started coming up, and this line started coming down, and then this trend is basically starting to trend upwards, because as you can see, the 55, the slower one, is moving, crossing underneath the so this trend is continuing. So you'd be safe to purchase a share at a lower price when the signal line meets again, as this does look to be somewhat consolidating up here, but that is an example. So for instance, right here, what you could do is, you don't even need to use all three of these. I'll show you another one I use of a moving average is, let's throw in a simple moving average, a 50 simple moving average. We'll change that black, and then we'll add a what is it? So usually with trading, some people use one moving average indicator, but I think the best way to do it would be a short range moving average indicator. So like a 50, and then another one, which is basically like a shorter period, which is like a 9 essentially. So 9 simple moving average, and we'll change this to pink. Right, so this one is actually coming down, so it could be that this comes down and then this actually goes further down. This makes sense because the price is about to come down. So this is about to go down here. But in the 1 month period and the 3 month period, you can see that this is actually a big trend upwards in the upwards direction over the short period. And then when this line is basically underneath, when you have your 50-day moving average as a support line, that's a very good indication that the market will continue trending upwards. So when you're looking at long range, when you're looking at longer ranged or stock trades, this is really handy. This can be really handy in terms of knowing when to buy at the lowest price, so like right here, and knowing when to sell when these lines begin to basically converge back together. Another indicator that's really handy is stochastics. The stochastics lines is basically composed of two lines, a fast line and a slow line, and they basically sound as you think. A fast line moves faster than a slow line, and you have two areas. One is overbought and one is oversold. So let's just turn this to red and green. So as you can see, so when this kind of looks similar to the MACD, but it gives you another better indication of where the trend is heading. So when the lines cross over right here, for example, when your fast line, your black line, crosses over your slow line in the 80 range, this is considered oversold, and you could potentially lock in for a profit. And then as it comes down here, here's a potential buy signal. It could go lower. You basically look for these lines to cross under 20 for it to be considered a pretty good buy. Here it's actually considered. Here's actually converging in the middle, so you'd be purchasing it at a higher price than what it usually would trend for. Like for example, right here. Let's see. Right here is a really good area. This is where it was at 30 cents. And then it crossed back up. And then here, this is actually really interesting. If you're a day trader, basically, you could say, oh, this is coming up like this, and then this is acting as a resistance, but then here it starts going down. So you could purchase it here and then basically trade. And then once, this is a really good indication right here of a crossover event. So right here, the 50 average is moving over the shorter period average, which is a good indication that the market is about to turn downward. So you could potentially lock in a profit here or lock in for a smaller profit here, and then basically wait for a big dip right here, and then purchase again here. As you can see, this starts trending upwards, purchasing again here. And that's a really good indication because the MACD actually has a sell signal up here. So this is why you'd pair the moving average with the MACD. You want to have two confirmations basically. As this one goes down, and this one's still acting as a sort of support line. And then right here, this is a good area where it's trending upwards. So if you were to look at this is upwards. You would have purchased somewhere back here, and then as you can see, there's a purchase signal right there, and then you'd sell when these converge up here, which is a really good way of trading. Actually, this is only a few days later, or basically, let's see, it's about a month later actually. And then continued on. This one is a very good indication of that it's going to keep going. We don't know what it's going to do up here. It could actually just flat up here and then come down again. My guess is that it's going to come down because within the short period right here, let's go to 5 days, the price is looking to converge again, and this line is coming down. So this is a good indication. If you're a short-term investor, you could sell at this point and then buy it over here at a lower price. Not for me though. I bought it down here, so I'm going in for a long period trade. So this really doesn't worry me at all, especially with this stochastics indicator right here. It's a good buy signal right now. If you were to buy it right now, and then you'd go back up basically. And this is a gold stock, so it's in a pretty volatile state. You can see on the 2nd of this month, or January, it was actually up to $1.51, which is really nice. It's all dependent on the gold market. The gold market is really up right now. But these three plus the moving averages are definitely what I use. You also want to look at financials and see how they're doing. This company recently found a gold area in the somewhere in Mexico, Chihuahua, Mexico. So I feel like this would be a good long-term investment, especially if they strike some gold deposits and whatnot. Another really good stock to look at here is Fire. Now, Fire is really interesting because it was one of the most heavily traded stocks on the Toronto Stock Exchange just a few days ago. Let's look at the 5-day period. So over the 5-day period, this acts as a support right here. So this is actually really nice. We bought around here, 27, which is up here, like here, and then it continue going up. It's sort of consolidating right now. So right now you can't really tell what's going to happen. It could come down, but right here it's considered a buy signal, which kind of makes sense. Additionally, this company is actually reporting its earnings on February 11th, and they actually cut their debt in half, which is very strong indication that the company is doing very well and will make sort of a comeback. They also do have a new CEO, so this is actually a very nice stock to purchase over the long term. Let's see over the long term. Let's say a one year hold. Right here, this is really nice. This is what you'd want to see. So right here, this is a double bottom shape. It's an M shape basically, and this is a good indication that the stock will go into the bullish direction. Two terminologies that you need to know here about market trends. One is called bullish when the market is trending upwards, and one is called bearish when the market is trending downwards. This is a good indication because we have this one trending up, and then this one's slowly starting to trend up, and then additionally the MACD indicators heavily converged, so it's going to take time for these two to come together. I'm not sure when that's going to happen. It could be within the next month, could be within the next few days actually. But over the long term, this is a really good long term hold, especially with the CEO looking to turn the company around. Now, this is actually a really good indication. What you could do is buy here, wait a few days, watch these closely, wait for them to converge, and then sell, and then buy again at a lower price, and then basically do it that way. You could do it that way, or you can just hold for a long term. As you can see, they were actually hit pretty hard by the pandemic. Their top dollar was about $3 per share, and it actually went down ever since. Their management hasn't really done anything. This is back in 2018, so this was 3 years ago when that peak was met. So you're actually getting it at a very cheap price right now, and there's not very much risk unless you're one of those dinguses that decides to invest 40,000 shares or 45,000 shares into one stock. Then you're kind of an idiot. You always want to diversify your portfolio. So let me show you what my watch list looks like. So this is my watch list. As you can see from the last day of trading, it was a very nice day. The stocks over. The stocks were very good because all across the market it was up, and basically I use these strategies to trade with these kinds of stuff. For example, Real 2, we can have a look at right here. The chart. So this one, as you can see, the 50 period moving average is up top over the smaller 9-day moving average. So what you can do here is extend it to a period. So it's actually bullish or bearish, I mean, for this period. So you could actually wait for this to come down further. Over a 5-day period, however, yeah. So here's a good, really very nice indication. So it had a bullish run right here at up to 18. So if you're a day trader, you can sell here at the peak, because when you have, here's a good indication, when you have 2 or 3 candlesticks going up, there's a good chance that the market will start to reverse slightly. And this is here's a buy signal, which is very interesting, which means that this bearish run is not going to last too long. But when you have a convergence here, it typically means that the market will start to trend downwards down here, which is very nice. If you're a day trader, you can look to see when those will converge. In a 1 month period, I think we have the same thing. Yeah. So if you're a long-term investor, right here, this would have been a good place to buy for a bullish run. This was back in 2020, and they got hit by the pandemic, so they started going down. And it doesn't look like they're recovering, but their quarterly earnings are very good. This is a strong buy, recommended by them. I wouldn't listen to those. I'd go based off the indicators. You can get it at a much better price, potentially, especially at this crossover here. This dip here, you could potentially wait for it to dip, or you could go ahead and invest. According to the stochastics and the MACD, this could be a good buy. But sometimes what the MACD will do, it'll buy here, and then it'll kind of just taper off down here, and it's not going to go up anywhere. So you need to be careful. You need to have multiple indicators. So this might not be a good buy. If you're going to buy here, it could be that this market just continues to go down, and you realize you could have gotten it at a better price. 2-year period, however, you can see that there's a crossover event here again. So it's still definitely trending downwards. So you want to be careful when you're dealing with this stock right here. Definitely a good investment in a short-term idea. Even a long-term, you can wait for it to recover, but right now, as you can see, it's not a buy signal right now. It is kind of just, there was a sell signal up here, and then it kind of just tapered down. So, I hope that was helpful. These are some of the indicators that I use typically in stock market analysis. So if you have any questions, please leave a comment down in the description below. And don't forget to comment and subscribe, and like the video if you enjoyed it. And dislike the video if you did not enjoy it. Thank you for watching.